Good morning, everyone. My name is Jeffrey Have, and I am a certified public accountant at the state of New York, what's called a CPA. I'm also an accounting professor at the City University of New York, and I've been teaching accounting for over 8 years now. I also hold a position for a fashion brand as a vice president of finance and operations, and I serve as a member of the board of directors of many other fashion brands. So I just have 5 minutes to drive you through this video. My goal, I would say, with these couple of videos, it's really to make sure that all of the students that are going through accounting or accounting subjects have the tools and the knowledge that you guys need to be successful in the subject. And I will make sure that within the next 10 to 15 videos you have a very strong base to go into the intermediate and advanced level of accounting, if that's what you wish. The first thing that you need to know when it comes to accounting is the definition of accounting. It's extremely important to know the right definition. Now, guys, many of you have heard that accounting is the language of business, it's the flow of money, it's the recording of transactions. It's none of that. The only definition that I need you to know is information and measurement system that identifies, records, and communicates relevant, reliable, and comparable information. And I am going to try to put it down there. But accounting is the information and measurement system that identifies, records, and communicates relevant, reliable, and comparable information. Every single word of this definition, it's important. If you miss one of these words, the entire equation falls apart. And I'll make sure that you understand why every word makes sense. Accounting is an information and measurement system. It's a system that informs and measures business transactions. That we know. But then you need to identify. The first tool in accounting is identification. You need to identify what transactions you're going to book, you're going to record. The second part of it is you need to record it. Why it's important to record? Because then we won't remember what we did 2 days from now, a month from now, a year from now. Most of us won't remember. If I ask you what you did on, I don't know, August 4th, 2018, you won't remember. If I ask you what you did on September 2017, you won't remember. But when it comes to accounting, if I ask you what transactions were happening in the company those days, you do need to remember, and that's why you need to record. All right? Then you need to communicate it. It's important to communicate. If you don't communicate, guys, anything that you identify or record it doesn't matter, right? If you're running out of a building on fire and people keep looking at you and asking you what's going on and you say nothing, that's not right. You need to communicate. You need to let them know what's going on. Then the information that you identify, record, and communicate must be relevant. If it's not relevant, then it doesn't matter. No one cares. Then it needs to be reliable. You need to trust the information. We as accountants, we are based on credibility, and if we don't have a credibility, if people cannot rely on us or on the information that we provide, then nothing matters. We're worth nothing. The information that we provide is worth nothing. And then it needs to be comparable. You need to be able to compare it, guys. If I tell you that AT&T is making $5 billion on 2019, is that good or bad? Some of you might say it's good. Some of you might say it's bad. We don't know until we know what the market is doing. If then I tell you that T-Mobile, who is the direct competitor of AT&T, is making $10 billion on sales, then you might say, yeah, AT&T didn't do such a good job, right? On the contrary, if I tell you that T-Mobile did only $1 million, then you might say, yes, AT&T is doing a fantastic job, right? Some of you might say then we have to go into the margins and the EBITDA or the net income. Yeah, but if we base the information just on sales, you need to be able to compare data, all right? So again, accounting is an information and measurement system that identifies, records, and communicates relevant, reliable, and comparable information. Guys, if one of those words is missing, then the entire equation, the entire definition falls apart. If you don't communicate, then it doesn't matter if you identify or record. If you don't record, it doesn't matter that you identify and communicate, so on and so forth. All right? Take care. See you in the next